to the Monday Futures Market Outlook for May 2nd, 2011. This is Patrick Ceresna. For those of you that have not had the opportunity to try out eminisource.com's trading room, 5-day complimentary memberships are available on the website. As always, we start off with a weekly chart of the S&P 500 going back 3 decades, and when we plot an 80-week moving average on there, it does a very good job to depict the bull and bear market cycles that we've gone through. Since the lows that were put in the summer of 2010, we were looking or anticipating a market rally that could go even as high as the 1360 to 1380 area. We now even have measured moves that indicate moves as high as 1400 that can go. So we do anticipate the current rally can still maintain itself for a short duration, but we are at some point anticipating there to be a profit-taking cycle off of highs put in somewhere along here. Let's just review the key intermarket observations that we want to look at. We have an intermediate bullish bias on the market, but we are approaching the upside targets for the year. U.S. dollar continues to weaken, and which is going to keep the existing trend in place for indices, commodities, and bonds. We've been anticipating a market top somewhere in this 1340 to 1380 area, and there is one measured move that targets as high as the 1400 level, but we do anticipate that when a US dollar bottom comes in, and we do believe that there will be a US dollar bottom somewhere in the second quarter, probably over the next 2 to 4 weeks, then we could see a reversal in commodities and subsequently reversals in the market that all correspond with the event. So we're going to be observing that US dollar very carefully. When we take a look at that S&P 500 on the E-mini futures contract, we had that bullish breakout above the 1340 area marked off by that focal point, and subsequently, like we've drawn on the last couple of weeks, we've got now a move directly into the zone where we've talked for most part of this year, where we felt that the highs of the year could come in. Really at this stage, while the trend is distinctly higher and there's nothing to indicate technically that this market has reversed, we do believe at this stage the market represents a very poor risk-reward proposition where you probably have a few percent upside potential for a 10% downside risk. And so in the bigger picture, this is an environment from which deleveraging and taking profits and locking in profits is a good exercise. Next year, I want to take a look at that U.S. dollar index futures, and we continue to see weakness and deterioration in that dollar. We did a measured move indicating a downside target in the 72 to 74 level. The 2008 lows on that dollar came in even as low on an intraday basis as low as the 71 print, but majority of the consolidation occurred above 72. So we're coming up into a very big support zone right here on the downside, but there's no denying that there is only one distinct trend in place, and that's for a lower US dollar. So even if we are looking for a bottom in the dollar, it should take weeks, if not a month or more, to really bang out a low, unless there's given a distinct catalyst that would make the US dollar bullish. More than likely, we're going to see some significant basing down here over a couple weeks. Next year, I want to take a look at copper futures, and we distinctly have seen copper consolidating along the downside end of its trade range around that 410, 420 area. Copper, which in many cases is used to gauge the health and growth of the global economies, continues to actually consolidate in spite of US dollar weakness, which naturally has copper strengthen. If this is a very big topping formations that we're seeing in copper, any technical breakdowns below 410, 420 would open the window for copper to consolidate down into the 370 or even the $3 area on the downside. So we'll be watching very closely whether copper remains trade range bound or whether we start seeing selling coming in. Next year, I want to take a look at gold futures, and when we take a look at the gold price ever since that late March breakout on the upside, it's been in a trend higher distinctly. We did a number of measured moves to indicate where gold could be going on the upside. Really, we were looking for two targets, the 1520 area, and then subsequently a move as high as the 1580 to 1600 zone on the upside. We really have now completed all our measured moves on gold, and while we certainly cannot say with certainty that we don't know whether gold will do what we call an extended move higher. Realistically, anyone looking to actually gain more upside from gold here is really has a diminishing probability of success at this point. So we're really looking for a short-term high in gold somewhere along here. We already have a reversal candle there, but that's not enough information to make any conclusion other than that it rejected off of an overhead resistance level. But we are looking for tops in gold. Next year, I want to take a look at the silver futures market. And while we didn't mark off any focal points, we felt it was worth us making technical observations on silver, as it was really going through a very exponential rise on the upside. At this juncture, we were looking for moves even up to this $50 area, and even suggested that if there was enough momentum on an extended move, we could see move even as high as $58. But we were looking for some sort of an indication of when silver was going to reverse. We have a very big reversal candle that came in on silver here, and while that certain one day does not make a new trend, these are levels where silver should reverse. So seeing these big kind of reversal candles is simply giving us an indication that that other technical traders and other traders are also seeking to lock in profits off of these types of highs. Next, I want to take a look at crude oil futures. And crude oil futures were in a position to potentially break out bullishly and head for a measured move finish up into the 118 to 122 area, and subsequently have weakened this morning in part due to Osama bin Laden's death. And so really at this stage, with these highs coming in up along this zone, if this reversal sticks, particularly any breakdowns below 111 and 110 on the downside, still may mark a double top on the upside of crude oil and subsequent reversal. So we're watching very carefully whether or not there's any follow-through selling on crude oil, and if there is, then we would be looking for a move all the way down to this 105, 106, and then subsequently weaker. Finally, I want to take a look at the 30-year Treasury notes, and while we've seen a very good extended sideways range-bound market along the downside, we're now eagerly anticipating whether or not the 30-year Treasury bonds are going to be beginning a new trend. Really at this stage, we've reached some significant overhead resistance where all the highs of the trade range have occurred, and if Treasury bonds can actually push to a higher high, may indicate a reversal of trend. Now, at some juncture, there will probably be a flag or a wedge back on the downside, so it's not going to be a straight line higher. But really, at this stage, any bullish breakouts above this 122 to 122.5 area would certainly be a very good positive for Treasury notes. That was your Monday Futures Market Outlook. Thank you for joining me.